All right, so welcome to another video. Today we're going to take a look at Las Vegas Sands. It's starting to accelerate with a lot of volume in there. As far as the stock overall, it's been acting weak, but I'll share with you some thoughts here in this episode. All right, so before we get started, if you don't know what Las Vegas Sands is, we're going to look at it right here. It is an American casino and resort company based in Nevada. So if you just look at the last 5 years of the stock, it's actually been kind of trending to the downside, and just over the last year we've really had some kind of trouble with the company. So you can see there we just got into about that $62 level, and the stock's been kind of going down and then sideways recently. So we'll break down the chart here in just a minute. You can see right now with the news, there's some stuff that came out, you know, from the street and Barron's and Wall Street Journal. Basically, when you look at these companies, there's some new regulations, and world's largest gaming hub here will cap the number of casino operators licenses at 6. So the stock is moving, you could say, because of this news. But as we know, there's a lot of different reasons why stocks move. So here's the Sands website. So they own a ton of properties and make a boatload of money, right? So as we check these things out, and by the way, if you want to look at this, how we trade this on the option side, check out the Traders Fly website or the Traders Fly channel, because I have a different channel that we talk about options. But anyway, let's check out Las Vegas Sands here. And we get into it. I want to look at a little bit more of the longer term view first. And you can see that this stock, you know, here's the inception here. Early on, right around 2005, you know, came out, boom, tanked. 2009, ooh, trouble, right? Then it climbed back up. So let's kind of look at it now from here at this level. So when you're looking at from 2011, you know, this stock's actually been kind of, you're right at support. I mean, really, when you look at it, hey, if you want to buy it at the lows from a 10-year low, 12-year low, you're kind of in that area, right? So if you're actually thinking it may actually do okay, even if you're playing the bounce from a sideways consolidation, the stock's been really just going sideways for 10 years. And if you're playing it from the bounce, or the bounces within this sideways range, this is actually not a bad valuation, right? When you're looking at it, but you have to kind of be prepared that it's kind of trending sideways from the longer term perspective. So the question is if you're looking to get into the stock, are you doing it for longer term implications, or are you doing it for like a quick trade, or kind of like holding it for a couple months? So from a longer term perspective, this actually looks not bad. It looks decent. Granted, the volume here is not like growing or anything like that. But it looks okay because you're at the lower end, even from a sideways pattern. Then when we get into kind of like a weekly time frame, you can see the stock had some trouble around 70. So we had some resistance right here, and even kind of in this area, which was kind of confluence. So it's had some trouble. It went down, came back up. So there's like ABCD pattern. And this is kind of building out the support right here, right around the 35. So again, even from a medium term perspective, right, if you're like a multi-month kind of hold person, this kind of looks good at this price point, even at 42 right here. You're kind of digesting a little bit. I would watch out for the 70. You're going to get some trouble probably around that area because you've got these swing points coming in and some trouble. But other than that, you know, you're still kind of at that lower end, right? So again, longer term, we're at the lower end. Medium term, we're still at the lower end. So that all looks good. If we get into kind of the shorter term basis, you're not quite buying it at the lows here, but 35 is kind of the lows. And if you're trying to give it a stop, that would be nice to have it a little bit lower, but you just won't get it perfect. So here you can see there's that shorter term sideways consolidation pattern. And unfortunately on the shorter term cycle, you're actually buying it a little bit on the upper end. So if you're kind of trying to do it on the shorter term, I'd probably wait for this gap to fill a little bit if possible, or at least clear maybe 45, unless you're more aggressive. If you're kind of aggressive, then it's totally okay, because then you're getting in it a little early. Maybe you're getting in 10 shares now, then a little bit later it goes up, then you get another 10. And then if it really breaks out, you're like, okay, I'll get the rest of my 80 shares and then I have like 100 shares total. But until that point, you kind of need to be a little careful here, because from this perspective, that 45 is going to give you a little bit of trouble because the stock already is gapping up, and you're already gapping up like 13%. So don't chase a stock that's up like 10% or so. So as you watch this, this is the gap, and this is the little bit of the problem that you might see, and it could just fill in the gap here, and then we'll see that again you could be in this shorter term sideways pattern, which is kind of what we've been in right here. As you look into this, we've been in this pattern for the last August or so, till February. So that's kind of where the stock is kind of, okay, well, now you might get into a little bit of chop. So again, if we're looking at this longer term, looks pretty good, right? If you're a longer term holder, medium term, probably also pretty good. Shorter term, you might be buying it at the high end, so be careful in that case. So I would usually wait a couple of days before doing anything like this, because then it allows those earnings to, not earnings, but it allows that news event to digest. And you do have to keep in mind the earnings, you've got 126 coming out with earnings, and that could either push that stock higher or lower, so be a little careful there, right? If you're doing it for a shorter term, understand you don't have a lot of time to trade. Otherwise, what you're doing is actually, you're going to be guessing on the earnings very soon. With just like, a week or so out, you'll be taking a guess on the earnings. So if for a shorter term trade, you probably want to be getting out before that earnings date, or earnings announcement. But if you're looking for medium, longer term, you're actually buying it at a lower valuation, but you have to give it enough room to kind of sustain coming back to about $35. And that's because as we look into those longer term charts, that area looks to be kind of nice, stable area of support, and you're kind of on the lower end of that. So anyways, I hope that gives you a good evaluation. Really, it all comes down to where are you within the stock and how are you positioning around it. So thank you so much for joining me. Remember, it just comes down to your trading length. If you're doing a shorter term trade, longer term trend, it's going to be completely different. So longer term investors are probably good with where it's positioned. Shorter term traders and investors, you're probably like, hey, I'm a little bit at the top end. Maybe I'll give it a day or two, see if it pulls back, or average into a position and see what happens. But you got those earnings to watch out for as well. Anyways, thanks for joining me. Check out the Traders Fly channel if you want to see some options videos, or subscribe if you're brand new to get notified for more technical analysis videos. Thanks again, and I'll see you next time.